Remember, we have Joe and Dale in our previous example. Well, this is part 3 to the trilogy. Now, Joe, he had money, he was responsible, but now his savings are dwindling. He had, let's just say 50. That's a pretty decent reserve. 30. And now he's down to 10K because he's a high roller, he kind of spends a lot. And now he's rethinking, oh shoot, because remember he has 2 kids and a wife, private school, cars, all those. That's all coming due now. And he's wondering, now he's starting to dip into his 401k. But remember, we have Dale, who took another ladder, even though he's CFO, and he actually calls the shots. But he also realizes, hey, if Microsoft can do that to, any other employee, high-level management, they can do that to me. So while he's been learning a skill, he's been calling out trades and winners, even all in the boardroom. And he is also making trades, calling things out, team, which is what we're going to go over, and the overall markets. Now, my question is, what are you guys going to do? Because we already seeing writing on the wall, corporate ladder, it's a scam. Now, I'm going to be going over the analysis of some trades that we did in our community. Team was called out, and then also just overall market analysis and where I foresee what's going to happen in the overall economy and markets. Let's get started. Most recent analysis from Forbes and the Washington Post show that entry-level worker to mid-level management is disappearing from existence. I'm talking analysts, finance managers, project managers, paralegals. Those jobs are dwindling. It's also showing too that larger corporations, even the higher up level management that we always assumed were safe, those are not. Microsoft just announced that they're quietly cutting 7% of their workforce and also saying and offering buyouts, but they basically say, hey, we don't care about you. And they're also specifically targeting tenured and senior level high earners. Meta dropped because they're unexpectedly going to raise more CapEx and spending way more than they anticipated. They're going to be spending $10 billion more. Now, this is not by any means that they're not making money. I mean, their acquisitions and overall their ways of reinventing themselves and acquiring other companies, and as well as Operation Llama and all those, they're doing fantastic. But that is a telltale sign, because reality is right now, can AI deliver the results that they're all promising? And this is all coming back to full circle now, because even now with the narrative of OpenAI, they're also showcasing signs of scariness and volatility, and they may not be able to deliver because little release notes are coming out that OpenAI is not able to deliver on what they have promised. They're already losing market share as well. OpenAI actually has already lost 20 to 22% of market share just in 2026 alone. They're probably going to become the next Netscape, in my opinion. Now, how does this affect the overall stock market? Of over our 1,200 plus business professionals, we had one of our community members, Lisa, who's one of the best students, called this stock out, which is team. And just to showcase our community, she got over 75%. And the crazy thing is that this is not short-term expirations. She did a leap 1 year out and she was able to get 75%. She literally entered yesterday. I want to showcase and kind of dissect this because this is a perfect kind of trade. So we have team, and we already know that software stocks have just been completely beaten to a pulp because of the AI narrative that, AI is kind of taking over a lot of the software stocks, which is the reason why you're seeing just massive drops. I mean, the team alone has dropped from 477 all the way down to 88 now. So what do I see on the monthly? Well, we have dropped, and all of a sudden we have seen an anomaly. What is this anomaly? Well, we have the highest volume on record. Literally ever since this stock was around since 2016, it is the highest volume on record. We have technically swept below. We have a long lower wick, and it's all buyers, but the volume is exceptionally high, highest it's ever been. On top of that, it's a doji, but how can a body of a candle be so small, yet the volume is so high? This is where you talk about institutions are starting to load up. And the thing is, earnings was today, which means if someone ever says, oh, there's no cheating in the markets and all that, that's BS, okay? Someone always knows something, okay? Clearly, institutions know because they cannot mirror or they cannot fake volume, but they can manipulate price. Price was definitely manipulated down here, and then we shot up. It closed at the end of the day 30% higher after this because the earnings was so high. And again, this was an expiration a year out. If you want to work with me, guys, link below. Something I also want to note is Lisa. She is a high-performing, high-level director at her organization she works for. She was doing it and still doing it while she's working full-time. And that's what I did too. I remember when I was working at GE, I was doing this full-time. Anyways, I'm just going to showcase, and I just want to kind of analyze where we're at in the overall markets. So the SPY has gone on an insane ripper I mean, the low was 630 all the way up to now 720. And, we had FOMC, rates are not being cut. And overall, close to $100 move in a matter of a few weeks. We are trading at a premium. There's definitely more risk to go long versus going short. And, we still have some unresolved gaps below here, as well as the Liberation Day gap. And earnings have been kind of mixed. Regardless with the SPY right now, this is not any area that I'll be buying. I did my buying below. I have my rule, 10%. I go purchase. Right now, we're trading at a PE of close to 28. This is premium levels. 2026 is a stock picker's market, and you have to be very particular because if you just decided I'm just gonna go in. No, your drawdown could be immense. Obviously, Google earnings, which just blew it out of the water. If you want to check my old videos, I literally said Google was going to be one of the winners, and I'm now over 120% of my return in a year. Now, Google is just parabolic, and even then, which is the crazy thing, Google is still, it's relatively high, but it's not that crazy. And Meta just had earnings, and this is where I want to pivot to. Meta dropped not because of poor performance, but because they're spending way more on CapEx than expected. The market's been on a parabolic bull run for several years, and every single market cycle has contractions. Now, eventually speaking, the AI narrative has been going strong, but the reality is now Wall Street and the overall economy is questioning, can they actually deliver? It used to be AI, as soon as you mention OpenAI, the stock goes up 10%. But now we're kind of in this parabolic phase. The market's just been going up tons, and valuations are getting kind of insane. Now, there's not, in my opinion, not much value left aside from I would consider purchasing Meta here for the long term. Other stocks, Google, I'm not purchasing here when my dollar cost is around 170s. I'm not purchasing the SPY here. But one thing I just want to talk about is overall market dynamics. If we look at the SPY on the monthly, obviously, if anyone purchased all these, you are doing fantastic. And you have, wiggle room of drawdown. But am I purchasing here? No. And should you be purchasing here? Absolutely not. But what should you be looking for? Well, you want to look at actual valuations. Personally, for me, I usually always look at the 20-day monthly moving average. This is kind of a very good anchor, and you can start looking through PEs, and because that's a reasonable drawdown. If we are down, if it drops 10%, that's realistically, it's a 12.5% correction, and that's very reasonable because then the SPY's price to earnings will kind of settle down a little bit. A lot of these other stocks that are big tech, they will probably tank depending on the rotation. So all in all, is what I want to say is be very careful and be picky. And at the end of the day, you want to have your plan B and you want to become a Dale and not a Joe. And also, if you want to work with us, link below.